go to February 4th. Just go there. Come on, Tradingview, you can do it. I just want you guys to be aware why I'm using this as a direction cue to scalp in. Now also I'm going to have the 4-hour chart up here. And Deribit has done something interesting. They've added Ethereum perpetual contracts, and they've also got rid of the contract size of track. It's all in USD now, but you can only do $10 amounts, increments, okay, multiples of 10. But that's great because everything you're looking at now is in right here. This is USD, 400 and something thousand USD. Bravo. Total. This adds up each one of these lines. So all of these are added up to right here. So that's how you read this side right here. That's why it says total. Here, it's 1 million. Now, earlier I put a short in. I had an emergency to get to, and I had to take the short off at a loss. So I kind of was mad at that. But I didn't get to document that. It is in my trade history right here. If you see that, put the trade on at 3,841. And then the fee was about $7 to put a $9,230 position on. And then it moved, let's see, $9 up, and I lost about $20. Okay, so kind of mad about that position. So 38.41. I would have been holding it. I'm still right here at I would have been at a kind of like, I want to bring that to everybody's attention. All right, so I'll be having this up here at the top here. And then hope I'm not getting bad, might be getting some bad, called streaming, uploading, hope not, possibly. Right, anyway, back to what we're doing here now. Looking at these recent trades, list of trades, I believe we're gonna go 1, 2, February 4th. Now I'm gonna go in here and put this as February 5th, hit OK. I want the first trade to be the, this one right here, February 4th. Nope, it skips over it. So gotta, and it's trades on the 6th sucks. So I'm gonna go back to the 4th, go figure. Magnifier tool. Try to head down to this trade where we made, where the Gator $2,340. Wow, that was a great move. So I want to look at that and see what was happening on it. All right, so mind you, I'm on a 1-hour chart. It's going to take days even if I went down to a 5-minute. Why? Because the Gator scalpel is taking trades from its own trade chart, right? Minute chart. All right. If I put this on a 1-hour chart, it's going to take trades on a 1-hour chart. Let's see what that looks like in a second. The trades will show up differently. So I like that granularity. I don't know if it's gotten there yet, but on a 2-hour chart, let's go back. Maybe 60 resolutions. All right. Let me go back to a 1-hour chart. See if there's any difference. Doesn't look like it's a difference. Oh, profit factor actually went up when I set it to a 49-minute chart. Oh, not 49-minute chart. Oops. 59-minute chart, I meant to say. All right, let's go to 59-minute chart. Just want to see what happens. Come on. No good, no good, man. That's just no good, man. So 60-minute chart gets us a little bit better. Now the problem with this is if I set it to a 60-minute chart and I go back down to the 1 minute, let's see what happens. You get this. Let's go to a 5-minute chart. Then we'll try the 12-minute. All right, 5-minute looks awesome. Looks awesome. Okay. Now I might want to see what that looks like as far as up to today. Okay. Looks like 6 trades were taken. It's not bad. 83% profit factor. It's not bad. Let's see what it looks like on a 4-minute. Pretty much the same thing, 83%. Now on a 1 minute, you know, you get these strange values. Now, I wouldn't go higher than 3 when you got Hakanashi on if you're automating this. You would want to put this on a regular candle, and you know, it still fares pretty well. But yeah, on a regular candle, you can trade all the way up here if you want. You know, you could. I mean, when I say up here, I mean higher time frames. Now, I recommend anything you recommend. Which one's trading 10-minute and what was the 12-minute? Can't remember. All right, so let's go to the 10-minute, and this is just regular candles right here. Okay, so and we only got the last, basically, what's today, the 13th? This is 13 days of trading, right? So we pull this down to the first of the year, and you got this. And if I wanted to pull it out as far as 10, collect data on, which is probably the first of the year, then this is what you get. Now, Hakanashi's values are going to a little bit more of that, but that's Hakanashi value. All right, so it's not bad. Now, to get back on point here, let's go to the 60-minute chart. And definitely don't want to trade regular candles on a 60-minute chart. But you do want to. Now look, this is February 4th. All right. And I got a 60-minute resolution set. And we got a better, so I might want to stick it right here just to check it out. Where did my chart go? Let's back it up. Let's go to give it a second, it's loading. This is 2018. We want to go to February 2018, February 4th. Which is about right here, February 2nd, February 3rd, February 4th. So right here, I'm going to zoom in, take a gander at this. All right, so good gander. Let me go list of trades. This was a $2,000 trade right here, and then this one up here was $1,000. All right, so to the overview, maximum loss was $162 for the course of a year. Okay, awesome strategy to draw direction from. Okay, now why are we just we're scalping? Now if I would hang out throughout this whole trade, right? If I was on that level right now, but I'm not on that right now. This would have lasted about not bad though. Better than I thought. About 2 days and 4 hours. Okay, 2 days and 4 hours. Okay, 2 hours for a $2,000 move. Not bad. Now, would you want to scalp this? All right. let's see what happened here. We got the EMAs up, and we got a bounce here. Let's take a closer look at what happened here. Now the yellow EMA is a 21 EMA, the green one is, and the light blue one is a 100. And the green one is, the purple one right here is a 200. So interesting enough, this is using it as support and resistance. As you can see, when price pulls away from the 21, you could expect it to come back into it. All right, that's the other call too. So right here is just pulling away, coming back in, pulling away, come back into it just a bit, pulling away, come back into it. Okay, then this Heikin-Ashi value turns green. All right, it doesn't get long until this bar. Don't ask me why, I can't tell you, but it has with the Gator decision-making process. All right, and boom, it gets the green, it gets the signal right here. Change this to a 60, and then I gotta change this to, oh yeah, let me keep this at a 1. Let me apples to oranges here. 1 minute, and then I'm gonna change the to 2018 to 4K. Enter. All right, let's put this to a 60. That's a 1. I'm gonna put it to a 60. Wait, let's go back to 1. Look at it. It loaded up. Here's the green signal right here. And that's why you see it here. Okay. And bam. Even on the 1 minute. Okay. So interesting stuff. All right, so I'm gonna go here, change this to a 60 minute chart, internal to Gator. We got our green signal right here again. I just wanted to make it a little brighter so we can actually see it. Here's the green. And boom, boom, boom. Turns red, turns red, turns red, boom. We get a short signal right here. Then immediately following that short, we get a long. That could have turned into a loss. Now all this does is take away a lot of noise. The Heikin-Ashi is taking away noise, and it's reflected gesture, because the values that you see right here are noiseless, and it would take these trades at exactly where the bar, okay, the Heikin-Ashi bar that is. And if that bar closes right here at the top, okay, let's zoom in so you can see exactly what I'm talking about. So if the bar closes, okay, we get a signal right here, boom. What happens? The bar closes where? Right down at the bottom. As you can see, the bar opened up at the top. I'm sorry, here it is right here. The bar is up here. As you can see, the bar opens at the top. We get the signal on this bar. We won't take this. At the close, what does it do? It plots its plot right here at the top of this part. At the top of this mark. So when this bar closes, the bar opens up here because it's a Heikin-Ashi value. This is when you take your value on. It's really you're taking it at the opening, okay, of this bar. Really look at this, all right, on Heikin-Ashi value. So bam, it opens right here. This is where price is at, and it opens. All right, where the moving average is at. What is that? All right, so moving over here is where we also get a buy. So that was not a loss according to the Heikin-Ashi bars. So we get a long signal here. We wait till it closes, then on position. That's how we typically look at these things. Now, moving on, looking at how these signals get taken in comparison to the moving averages. That's what I'm really eyeballing right now. So also I'm looking at how the Heikin-Ashi turns green or red. Green right now is white, and then it goes in that direction. Now this one, it gets mixed up. Short, stay short. It gets mixed up. So when you see this, when we're trading this, and we encounter something, we have to look at the moving averages for our price direction. Right now, this bar was moving down. At this point right here, it moved back into average. So right here is where we could have said, oh, it's escaping. It's got too much divergence from the 21 moving average. Divergence. How much divergence? Let's see. Shift. We got a good 4.4%. So let's just say 5% divergence. Okay. So if I move it all the way from the top of this to the bottom of the moving average, we got 4.68%, and that is a divergence that you want to short. If it's all right, you definitely would have shorted that. Now, looking at this, so we would have stayed short, we would have claimed clean without looking at the direction of the of our Gator. All right, because I'm going to say the moving averages trump the Gator. All right, as far as I'm concerned. So we can understand that we're going to put priority over is right now. And I'm looking at a 1 hour time frame because why? Because the strategy tester has showed us that it's 68% and doesn't take too many big losses. I don't know any other strategy out here that's going to give you that. Okay, that type of drawdown, $162 drawdown. Come on, let's look at the performance. Largest losing $113. Okay, that's worth your weight in gold. I sell this strategy for $555.55. So we get these, and this is what I'm talking about, right? All of that right there, especially right here. Let's just zoom in on this stuff and take a real look before I begin trading. All right, short. If we would have been short there, we could have scalped it from down there, right? If we went long here, could have scalped long positions on every new candle, right? So let's see, long position, short position. Could we have scalped right here? We got a short. Remember, the short came up. Where is that? The short signal came right here. So yeah, I would have shorted the next bar. We don't have to wait. The next one, if you would have shorted right here, got out, you would have shorted again. No, because it's a green signal. So we would have to start looking for the longs. Okay. We're looking for the signal, not the actual strategy plot on the screen. We're looking at the signal, which is right here. This green and red bars drawn on the screen are. That's what we're looking at. All right. So we would have got long. So that looks marvelous right there. All right. We zoomed in on this. Short. Marvelous. We could have took a couple. There's a green bar right here that turns red again. Now, green and red. What you think I would have did? Waited till this bar came, it would have turned shorty. Okay, it's like the strategy tester. Okay, here's a green bar right here. Would have went long. Could have got out up here. All right, then it turns went long. Could have got out up here. All right, then it turns red right here. So I wouldn't have made it up here. I'd have been shorting right here. on this next bar, I would have started shorting. So I'd have probably shorted up here, came down here, got out. Green, short, green. So then what? I'm looking for long positions. So I probably would have went here, got long. So listen up, what you want to do, because we're just looking at Gator. Now, if you would have if we would have just looked at the EMAs, and then us coming down, flattening out. And when you flatten out, you're not supposed to take trades. That's what the EMA is telling us. This with the blue line, the fact that is increasing, it's got a slight upward slope to it. That's what I'm gonna say. That's what it's telling us. And that's what you got to take it as. So you can look at that and look for the slope, because that's what I was looking for. I'm looking for a slope. So you can look at this slope of the light blue EMA, which is the 100-day moving average, and figure out, hey, you know what is going? You could have seen that. It's clear as day. Go back in here to the EMAs, open it up. This blue is the 89. Now, how do I know that? Because I can put this as a 21, and it's that blue one around. See, blue one's gone. Put it as a 89. 200. All right, hit OK. Things are looking different now. All right. I think I might want to add a 10